Hi, this is Alessio. Hope you're well. In this video, we're going to take a look at some very interesting and shocking Bitcoin-related charts, like this one over here and this one, and what those charts potentially mean about Bitcoin. Plus, I'm going to respond to this astonishing video.
But take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it.
All right, guys, join me. Alright guys, welcome back. Now before we have a look at some very interesting and shocking charts in this video, I want to first talk to you about the data that is most important to you. That's right, I'm talking about your personal details like your address and financial data. We give out our information to companies on almost every online interaction. And with the growing number of data breaches today, I don't want my data to remain at any unnecessary risk. Imagine being able to find out in just a few minutes which companies or businesses have your personal data, companies that perhaps you don't even know about. Well, that's where our sponsor, Mine, comes in. I hope you allow me just a minute to talk about them. And by the way, as you know, we give any money we get from sponsors to charity. As I said a moment ago, Mine allows you to find which companies have your personal data and lets you control what you do with it, whether you want to keep your data with a company or not. So what you want to do is first go to saymine.com and sign in with your main email account. Then just allow the Mine website a minute to do the searching and the processing. By the way, Mine will only analyze the subject line and the sender of the email, as well as some metadata to identify which companies you've interacted with. However, rest assured, Mine does not collect any of your email contents for analysis, as their privacy policy states. So when it's completed, Mine then shows you the results on the page. For example, I found out that there are over 240 companies that have data on me. Personally, this is not something I consider ideal. According to Mine, the average number of companies for the average person is 350. Now, on the footprint page, you can see some of these companies. By the way, it's worth looking at the entire list, which I have to say for me was astonishing. Some of the companies I'm happy to stay with. What can I say? I love science. By clicking on a company or business, I could see that as an example, Cyberlink is storing email and identity data. By the way, I found another company that I don't even remember at all signing up for, so I don't want them to have my data. Now, here's the fun part. When I click reclaim, Mine lets me send an official deletion request email directly from my inbox to the company. This is essential because most companies will normally honor requests coming from the individual directly. Then after you've allowed to send the email, Mine lets you track and review your requests. You can cancel it within an hour if you should change your mind. Also, because companies and businesses need their privacy too, Mine is a solution for companies to help manage their own privacy matters and operations. So I hope you'll give this a try, especially if you want to begin reclaiming your personal data. I think this is a brilliant service. Make sure you visit saymine.com and sign up. I will also put that link for you in the description. I want to thank Mine for sponsoring this video, which also helps our charities as well. Alright guys, let's get back to the video. Alright guys, in a few minutes I want to talk to you about what this chart, and this chart in data is saying about Bitcoin. I think some of the charts I'm going to show you today could surprise and shock you. But before we do that though, I want to first of all start with this chart you're seeing here. And by the way, most of the charts I'm going to show you today are courtesy of Glassnode. In case you're not aware, Glassnode provides some interesting metrics and insights and data on Bitcoin. Now you can see over here, essentially what this chart is saying to us is that holders of Bitcoin, as you can see, are holders with coins accumulated in the first half of 2021 or earlier. Essentially what these investors did is that, according to Glassnode, is that they sold. So they panicked. So investors with 1-year-old coins, Bitcoins, panicked and they sold. All right, guys. And by the way, this is exactly what we said was going to happen. As you saw probably in the video we made with Gareth Soloway, we said, look, Bitcoin has to fall below 20,000 in order for some Bitcoin holders to panic and sell. Because I think so many people have got into their heads that 20K is the bottom. That's it. That somehow Bitcoin has to flush out almost everybody. Like there has to be a flush out, a shakeout of the weak hands. Panic people. I think a lot of people will get panicked when they see Bitcoin below 20K and think, oh, wait a second, I thought 20K was the bottom here. Whoa, what's going on here? Do you think that psychology, that sort of flushing out needs to happen at some point?
Absolutely, you're 100% right.
So as you can see, Bitcoin, as it dropped below 20,000, essentially these folks panicked. By the way, these are guys, again, as mentioned before, these are people who bought Bitcoin at its highest point. So when Bitcoin was likely trading near the 60,000, 50,000, again, 69,000, that range in the first half of 2021. By the way, at that point, you may remember, we were issuing warnings that was a risky time to buy. Why? Because there was a get-rich mentality. The mentality of people at that time when Bitcoin was about 60, 69,000, was all about how to get rich with Bitcoin. I talked to you about this in my video back at the time. And I think what's happened is prices moved too high too fast, and we need to see a pretty decent correction, a healthy correction in the market. And the sort of thinking that's happening right now, where people are just interested in Bitcoin, not for its value or its potential in technology, but just for making money and just to get rich. This is the herd mentality that destroys people. And again, these people never imagined that Bitcoin may fall below 20,000. And when it did, essentially, they puked and sold. By the way, I don't know if you've noticed this, but I've certainly noticed this, that in the social media comments on YouTube, all over the place, on Facebook, on Twitter, there's a lot of talk about Bitcoin going to zero. Now, I know this is crazy and ridiculous, but there's a lot more chatter and mentioning of this phrase, Bitcoin going to zero. You can see I put some for you here. Again, in this section, you can see some comments already. Bitcoin will eventually be zero. Bitcoin will go to zero. Again, they're saying it with such confidence, as you can see here. Some more here. When Bitcoin hits zero, I'll buy them all. By the way, when I first read these comments, I have to say my reaction was a bit like Siamak from Joker. So I think basically what we're saying here, guys, is that there's a lot of blood in the streets right now. There's true panic and fear and hatred towards crypto and Bitcoin. By the way, do you know when these guys will buy again? I'll tell you exactly when these guys will buy again, at the next major top. By the way, some people have blamed Michael Saylor for why some of these people bought at such high prices, especially when he said this.
But take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it.
Okay, now I have to say to you, I think that's a bit unfair, because I think they took Michael Saylor's, essentially his comments out of context. So I want to give you the full context. However, I should just say at the beginning that I do think it's extremely risky and very dangerous to actually borrow money and put it into Bitcoin. Again, I would never tell you to do that, but I should just say that giving, again, just being fair to Michael Saylor, here's how he explains it. He says, look, everyone makes their own investment decisions, and I'm not a trader, so my views are always with a 10 plus year time horizon. And he says, if you pay off a 2.5% mortgage, you are long the US dollar, yielding 2.5% while the currency collapses at 7 to 20% per year. And that means you're short equity, property, Bitcoin, etc. So I think you have to be fair to Michael Saylor here. Whether you agree with him or disagree with him, that's another matter. But let me also say this. Everyone is responsible for their own decisions, what they do with their own money. Okay, so what you do with your money is your decision. All right, so if you want to be a cowboy or a tough guy, and if you want to do, again, what Michael Saylor is suggesting here, which again, I think is the wrong thing to do, but again, if you want to be, again, playing it very risky, playing a dangerous game, then fine, that's your decision, okay? Nobody has a right to tell you what you should do or not do with your money, okay? As long as you accept the risks, and as long as you accept the fact that you could lose everything. Now let's turn our attention to this chart, which is really fascinating. According to Glassnode, here's what they're saying. They're saying that bear market lows have historically been established with BTC drawdowns of minus 75% to 84% from the all-time highs, and taking a duration of 260 days in 2019-2020 to 410 days in 2015. And then they say over here, with the current drawdown reaching minus 73% below the November 2021 all-time highs, and taking a duration between 227 days and 435 days, this bear market is now firmly within historical norms and magnitude. This is actually important. I'm going to share this chart with you because some people out there think that the current drop in Bitcoin, that the current bear market in Bitcoin is not as bad as the previous ones. In other words, it's not as severe. In other words, they assume that Bitcoin has to drop 80 to 85% in order for it to be a true bear market. That is wrong. That is a wrong assumption, as this chart shows here. In fact, let me show you this. Just in case some of you probably think that this is not as bad as the previous bear markets in Bitcoin, actually there's some data here that shows to you it's worse, objectively worse. Take a look at this. This is the net realized profit loss ratio. And here's what Glassnode says. They're saying, according to the data, the current drawdown is recording realized losses equivalent to minus 98,566 Bitcoins per day, or 0.5% of the circulating supply. And they're saying there have been only 2 recorded trading days with larger recorded realized losses found in the 2011 bear market and on March of 2020. And in fact, if you look at this chart, the realized losses, so the net realized losses, according to this data here, is actually as severe. It's as severe in this current crash as it was back in March of 2020 and also back in 2011. As you can see here. In fact, it's worse. It is worse than the previous bear market. As you can see here, previous bear market of 2018. as you can see there, and worse and more severe than the one back in 2014. Okay, 2013, 2014. Now look at this, it gets even more interesting. This chart shows the realized capital outflow for Bitcoin. And over here it says that Bitcoin is currently experiencing the largest capital outflow in history, hitting minus 2.73 standard deviations SD from the mean. This is one whole standard deviation larger than the next largest events occurring at the end of the 2018 bear market and again in the March 2020 sell-off. In other words, this is by far the largest statistical monthly realized cap destruction, as you can see here, on record. Look at this, as you can see down here. This is the biggest realized capital outflow for Bitcoin. Worse and more severe than the ones back in 2020 and the one back in 2018. Okay, the two previous largest capital outflows on Bitcoin. So what this chart shows is that the people out there who think that this crash and bear market in Bitcoin is not as bad as the previous bear markets in Bitcoin, they're wrong. They're objectively wrong, at least according to this data we're seeing here, and also this particular data we're seeing here as well. Okay, this is the final chart I want to talk with you about. It's quite interesting and important. So according to Glassnode, this chart shows to you the activity of long-term holders of Bitcoin. And according to Glassnode, investigating the profit and loss by long-term holders sending coins to exchanges, we can see a deep capitulation took place. In other words, when Bitcoin fell below 20,000. And this is over here, a few Bitcoin long-term holders even bought the $69,000 top and sold the $18,000 bottom, locking in minus 75% losses. So in other words, according to this data, even some hodlers, long-term holders of Bitcoin panicked and they capitulated and they sold. By the way, I want to talk to you a little bit about the meaning of this word because so many people make a mistake and misunderstand the meaning of the word capitulation. Okay, so over here it says we can see a deep capitulation took place here, but let's talk about this just for a few minutes. Some people think mistakenly that the word capitulation means the exact bottom. Okay, that's the exact bottom where the price then jumps back up. No, that is not the case. Capitulation is not a number. It's not a single level on a chart. Okay, it does not mean it's the exact bottom, and it does not mean the price cannot go lower. Capitulation is more a region. It's a zone. Okay, so we have to think about capitulation differently. Again, it's not a number, it's not a single level on a chart. For example, in 2020, as you may remember, the waterfall decline in that year, you see this waterfall decline. By the way, guys, if you haven't seen my video about waterfall declines, which I published last year, go ahead and watch it. I'll put the link for you later at the end of this video. Again, I want to show you this as an example. So during that major crash that year, essentially, let me just say this, some analyst friends of mine, said that at this level on the chart, we had reached capitulation. Again, based on their metrics and calculations. However, you will notice that price kept going lower. The reason is that during a waterfall crash like we had in that year, all the rules go out the window. There are actually no rules when a market goes into that kind of deep crisis, when it goes into a waterfall crash like the one we had back in 2020. So bottom line is, guys, that you have to be very careful here in this situation. So in these kind of situations, essentially what happens is the price seems to ignore support levels and actually ignores oversold, extreme oversold readings as well. Nonetheless, guys, however, back in that year, I did see some extreme acceleration readings, as you can see here. And this is my region of capitulation. So this was the region where I started buying. By the way, guys, back in that year, I was nibbling on the price at these levels. When I say nibbling, I mean I was buying small positions. And I told you this at the time as well. So this was my entire region of capitulation. And as you can see here, guys, it's not a level, it's not a number on a chart, okay? It's a zone. All right, guys. So you have a top end, you have a lower end, and again, you have to be careful here because again, there are no rules essentially when something like this happens. But essentially, I was buying with small amounts, so the risk to me was very small. Even if price kept going lower, it doesn't matter. And the reason is this, guys, that I was not interested in picking a bottom. Bottom picking, I think actually in this kind of situation is worthless. It's really useless. Instead, you have to look at your capitulation zone, your capitulation region, not a price level, as I mentioned before. Sorry for repeating this point, but it is so important because people get this wrong. Because if you're trying to pick a bottom, if you're looking for the exact price level bottom, you're going to get it wrong. So for example, if you had bought it let's say this, if you thought that the price bottom was much lower, well, guess what? You would have missed out. If you thought the price bottom was much lower than this, then essentially you would have missed out and the price would have said goodbye, and the price went up much significantly higher, as we know. Or what would have happened is you would have said, let's say you said this was the bottom right here, okay, and then you bought 100% at this level. So let's say a trader went in with full size, 100% position, if you thought that was the exact bottom. The danger and risk with that is that at this point, you very likely would have sold again, okay? Very few people have the nerve to hold a losing position from here all the way to here, okay, without panicking. So that's the danger with, going all in 100% position at a single price level, because at this point, you essentially said, okay, that's like, I can't take this anymore. And you probably would have sold. Okay, or somebody else would have done, if not you. Okay, the bottom line is, guys, that capitulation, more of a region, and that's why I was buying in this region. Again, I was looking also at extreme oversold, extreme acceleration readings here, but bottom line is I also knew that at that point that so many people had already sold. Again, a lot of people had capitulated already, and of course we know what happened afterwards. And by the way, I think a safer strategy would actually be to wait for the price to turn and go in your direction. So at this point, you can see over here. Look, over here, the price turned, and at this point, it made a higher low. You see this? So one low here, a higher low, and then taking out of resistance. That actually was the level when I told our members, I'm going long more aggressively with a stop loss just beneath these lows. So that's actually a safer strategy, in my view, a lower risk strategy, okay, than just essentially, again, trying to pick a bottom. By the way, make sure you go ahead and watch the most recent members video, because in my most recent member video, I've already mentioned my region or zone of capitulation for Bitcoin. So I mentioned the region or zone, which I thought was a higher probability level for capitulation on Bitcoin. By the way, we've already come into that zone as it is as well, just to let you know that. And by the way, I did actually started buying Bitcoin a little bit. Again, I started nibbling and buying small amounts of Bitcoin when it fell below 20,000 and when it fell to the areas of capitulation that I was looking at. Now, here's another example for you on crude oil. Again, the same year back in 2020. Notice again, when you have a waterfall crash like the one here, all the rules go out the window. In fact, in this situation, you can see back that year, crude oil prices went into negative crude oil future prices, okay? And again, we had extreme acceleration, extremely oversold readings. That's why you have to be very careful here. But again, we had a zone of capitulation, as you can see here. You can say the zone was entirely in this region here, as you can see. We also had extreme acceleration and oversold readings here. But again, I think a safer strategy, probably a safer strategy would have been just to wait for the price to stabilize, go back in your direction and make a higher low, which it did. It made a higher low here, as you can see. So you can say this was one low, that was the higher low, and also took out resistance here, as you can see. That actually would have been a much safer strategy because it gives you an uptrend, the sign of an uptrend, just like we had in the previous example. So guys, the bottom line is that don't try to pick a bottom. Okay, capitulation is not the exact bottom. Remember, the safest thing to do really is just to wait for the price to stabilize and form an uptrend. And the last thing I want to say is this. The last thing is, I know some of you watching this video probably have made some losses. I know some of you are feeling frustrated, angry, and again, probably bitter about what's happened with Bitcoin over the last several months. Maybe you are one of the people who've sold Bitcoin, or maybe you know someone who sold Bitcoin very recently when it fell below 20K. Here's one thing I want to say to you. There's a positive message in all of this, which is that as long as you can learn, as long as you learn from your mistakes, I think this actually will make you successful in the future. As Oscar Wilde says, every experience has value. And guys, as far as regrets are concerned, here's one thing I want to share with you. My favorite actor, one of my favorite actors, David Niven, here's what he says about having regrets in his life. All right, guys, listen to this, and thank you very much.
David, looking back, what regrets? None, honestly, really none. I mean, this is the corniest and oldest line in the world, but the only regrets anybody should ever have are the things that they don't do and don't try.
And you've tried everything?
I think so.